Hey, it's Nate from Navigator Bookkeeping, and let's talk a minute about tax savings accounts and how they can make it so that you never have to worry about paying taxes at year end again. So let's start at the beginning. What is a tax savings account? It's basically a savings account you set up to put a portion of your revenue or your profit into your account every month. So basically, what you're doing is you're saving for taxes throughout the year instead of paying kind of a big lump sum at the end of the year. And this also ties into estimated taxes. If you're not sure what estimated taxes are, they're quarterly payments that your business pays or you pay to cover basically a share of your tax liability throughout the year. So basically, the IRS likes getting paid more than once a year. They like to get paid throughout the year. Pay as you go is what they call it. So whatever your tax liability was the previous year, you usually are supposed to at least try to cover that portion. And then if your business is growing, you can pay even a little bit more on your quarterly payments. But what a tax savings account does is it allows you to save for those estimated tax payments as well as that year-end tax payment throughout the year. So just to put it into practice, if my business brings in, let's say $10,000 in a month, I'm going to set it up to put a certain percentage of that revenue into that tax savings account. So maybe that's 10% of revenue. So let's just say that, make it easy. 10% of revenue is going to go into my tax savings account. So that means if I'm bringing in $10,000 a month, 1,000 is going to go into my tax savings account. And then basically I'm just going to do that throughout the year. $1,000 per month, depending on my revenue. If my revenue goes up or down, I'm going to contribute more or less. Sometimes we'll even base it off of profit to give a little bit more of a specific amount going to that tax savings account. But the specifics change business to business. The thing that stays the same is a tax savings account being there and you saving into it. So we put money in that account throughout the year. As estimated tax payments come up quarterly, usually April, June, September, and December and January are those four payments. Then we'll pay the estimated tax payments right out of that tax savings account as well. And then when the big year-end tax payment comes up, two things have now gone positive for you, right? You've paid estimated tax payments, which have paid towards that year-end balance. So if you owed $20,000 without any estimated tax payments and you've paid, let's say $3,000 a month, you now have paid $12,000 towards that $20,000 already. So now there's only $8,000 left. On top of that, you also now have your your tax savings account ready to go with a balance that can cover the rest of that year-end balance. So you've paid the estimates towards that, and then you also have a balance left in the tax savings account as well. So what this is going to do is going to be a mindset shift, and we see this with our clients all the time. Instead of worrying about your taxes from, January through April and just stressing, how much is my balance going to be? I'm so worried about what I'm going to owe. I don't know where that money is going to come from. Instead, there's money sitting in your business ready to pay that balance, right? So if that example I talked about, that $8,000, in the past, you would have owed $20,000 all at the end of the year. Maybe you paid estimates. Even then, you still would owe $8,000, and you'd have to kind of scramble to find that. In this situation, that money is just in there ready to go. Even better, what we've seen with a lot of clients, even what I see with my own business, is that I oftentimes will actually oversave a little bit. So when I get to tax time, I file, I find out how much I owe, and it's almost like an exciting process in some ways, because now instead of scrambling for the thousands of dollars that I owe in taxes, the money's in the tax savings account. I just transfer it over, send it off to the IRS, done and dusted. And the best thing is, I oftentimes will have money left over from oversaving. So I'm actually able to kind of self-refund a little bit depending on what I want to do. So you can then use that self-refund to fund your next year's taxes. You can take it out and pay yourself. Maybe there's something in the business you've really been looking to buy that you can now buy. You can add to your savings, all kinds of different things. But basically, by saving throughout the year, you're preparing, you're getting ready, and then when that big tax bill comes up, you're ready to go instead of kind of scrambling for cash. We see this really benefit anyone from really small businesses to very large businesses, because either way, whether you're really small or really large, your tax bill is still going to feel probably pretty daunting. Whether it's hundreds of thousands of dollars or whether it's, a couple of $1,000s, it's going to feel daunting either way. This tax savings account is going to set you up to feel a lot less stress about taxes, to be a lot better prepared for taxes, and to kind of take all that stress and despair about taxes away and instead just help you save and get ready for those. So if you have questions about the tax savings account, I'm happy to jump on a call and talk about it. Even better right now, there's some pretty decent interest rates going on at checking accounts and savings accounts, so you can even get some interest on your tax money while you're saving it. So yeah, check it out, think about it. It's definitely going to be one of the best things you can do for your mental health relating to owing taxes.